This Loan Plus 3 loan management software training is for the period report. The period report serves as a cornerstone snapshot of the business day for many loan stores. It gives a concise report of the financial impact of the day, transactions such as loan proceeds, payments on loans, deposits, and withdrawals, expenses, both cash vouchers and check-based, charge-off bad debt totals at the end of month only, as well as tracking for many other items that exist on a daily, month-to-date, and year-to-date formats, making it an excellent reporting tool for the previous month and year comparisons. It's recommended to print this report in the drawer register report nightly after the close of each business day. These reports will provide a good set of historical data and ensure you take an additional step toward establishing data integrity. Permission to access the period report can be controlled through config, user info, and permissions. Under the Reports tab in Permissions, you will find the user-level selections. The period report contains the following sections. Date of period report. Close of business day creates the period report for that date. Drawer assignment, master, is always drawer 1, which is used by all employees unless the multi-drawer system is utilized. Totals, bank balance totals, outstanding loans balance, total number of active loans, period to date, business day closing total, historical as these are generated at close, month to date, total since the start of the new month after closing at the end of the month, year to date, total since the beginning of the new business year after closing the year, date, drawer, and totals, withdraws, cash or checks, withdrawn from the bank balance. NSF checks are also recorded in the withdraws column. Deposits. The deposits column consists of the office's daily deposit. A cash deposit increases the bank balance and decreases the cash should be for the day. Auto deposits of non-cash payments like cards, checks, and money orders are also shown here. Checks. Check section consists of any check written via the check register. CHK number, check number on the check. Amount, amount of check. Expense, expense amount of check. CAT, expense category. Vouchers. This section includes any cash tickets generated in the office. A voucher decreases the cash should be for the day. A voucher example is paying for lunch, postage stamps, or window washers. This is money taken from the cash drawer directly to pay an expense. Amount. Amount of voucher. Expenses. Expense amount of voucher. Category. Expense category. Cash in. Cash in consists of any cash coming into the office, primarily from the home office. This figure increases the cash should be for the day. This is typically ICS/D, CS category number 19, but can be used for other categories depending on the use case. Amount. Amount of cash in. Expenses. Expense amount of cash in. Category. Cash in category. MISC income. Miscellaneous income is used for cash coming into the office from miscellaneous income sources. This figure increases the cash should be for that accounting period. Cash should be. The figure calculated by the software shows what your cash count should be in your cash drawer. Cash counts. Your physical cash count is tabulated at close by the employee for the drawer. Cash even. Over or short is the amount when cash is counted by the employee, and that amount is entered into the software. The title will change on the report to say one of the following: even, over, or short, depending on the amount entered. Totals. Bank. Primary bank account. Second bank. Second bank for centralized debit card payments. Third bank. Third bank for how much email renewals of instant funding. Balance. Total amount of outstanding loans, does not include fees. Number of accounts, number of open loan accounts. Period to date. Each day when the business is closed, a snapshot of that day's accounting and loan transactions is captured by doing the close of day. The next day, the period report will start over and accounting entries and loan transactions will be added until that day's close the day. The period to date is all the transactions since the last close. Period to date contains the following sections: loan type, a MTFIN, amount financed. Expenses, loan type contains the following: NL, new loan, loan type, someone who is taking out a loan for the first time with your company. FB is a former borrower loan type, someone who has paid off their loan and returned to open a new renewal. NC, no cash renewal loan type. Either this is a $0 renewal or the borrower had to pay some amount of money to renew and did not receive any cash to refinance the loan. BR, borrower renewal loan type. Borrower got cash back for renewing, refinancing the loan. TOT, total amount of N, L, F, BN, C, and BR loan types. IF, in full payoff, is the number of accounts that paid their loans off during the reporting cycle. Amount financed is the total amount financed for all loan types for that accounting period. NL, new loan amount financed total. FB, former borrower amount financed total. NC, no cash renewal amount financed total. BR, borrower renewal amount financed total. O, total of open loan type amount finance. PL, profit and loss, number of profit and loss for accounting period. Expenses, office breakdown of expense categories. Expenses 2 and 14 cannot be changed. Category 2 is used by the software to post bad debt charge-offs at month and year closes. Category 14 is used to post cash drawer, overages, and shortages. Expense categories can be named according to your specific accounting needs. Totals of transactions. Column 1, AMTFIN amount, financed in dollars for new loans, former borrower, no cash renewal and borrower renewal for that accounting period. Gross, total amount financed plus finance charge for that accounting period. Deposits, total amount of deposits for that accounting period. NSF, REV, AMT, NSF, non-sufficient funds, transactions and reversals involving the checking account. PRINCOLL, principal collected is the part of the payment toward the amount of principal owed. Generally, when a loan payment consists of only principal and interest payment, the amount owed for interest is processed first, and the remaining amount of the payment is applied to the principal balance, interest COLL. Interest is calculated as a percentage of the loan or deposit balance paid to the lender periodically for the privilege of using their money. It is important to note that total finance charges are a result of interest and ACQ. ACQ admin fee, COLL, fee for securing or creating the loan. Administration fee for the loan origination. It is important to note that total finance charges are a result of interest and ACQ live check, total amount of loans made by live checks. Live check, second bank, current bank balance of the live check banking account. Unearned, unearned interest calculated for the period of time at closing. Down payment, a down payment on a retail installment loan. Column 2, convenience fee, fees charged to customers for card processing not at the branch. A convenience fee for not having to come and pay at the branch. Collect, please refer to the formula in the documentation. Pay, collect. Total of all forms of payment like cash, checks, ACH, cards, money orders, and other for that accounting period. BR net balance of the old loan that must be paid off to perform the borrower's renewal, refinance. Please refer to the formula in the documentation. Net proceeds, the amount of proceeds given to customer for new loan, borrower renew, refinance, former borrow for that accounting period. ICS/DCS, total amount of the ICS/DCS for that accounting period. Income, cash supply, distribution of cash supply. Money to and from branch to home office. Expense category number 19. Miscellaneous collect, total of miscellaneous fees collected. only applies to loan types not specifically defined in the software like collection fees, lawyer fees, repo fees, and other. This is miscellaneous fees collect from loan register. Other pay collect. Other pay collect is the amount from any other form of payment that is not cash, check, ACH, card, or money order collected for that day, month, year. Instant fund, amount of loans funded by instant funding using email renewal process. Earned interest calculated for the period of time at closing. Column 3, funding fee, fees charged to the consumer for receiving loans via the email renewal process. Cash collect, the total dollar amount of cash collected for that accounting period. Check collect, the total dollar amount of checks collected for that accounting period. ACH collect, the total dollar amount of ACH collected for that accounting period. ACH collect second bank, the total dollar amount of ACH collected for that accounting period if separate bank account used. Card collect, the total dollar amount of debit cards collected for that accounting period. Card collect second bank, the total dollar amount of cards collected for that accounting period. And the bank account is a separate bank account from the branch bank account. Money order collect, the total amount of money orders collected for that accounting period. Miscellaneous fee, the total of any additional fees such as miscellaneous fee, title fee, repo fee, court cost and file fees collected for that accounting period. Sales tax collected, the total amount of sales tax collected for that accounting period. Column 4, late charge. BR, late charge paid during a renewal. Total amount of the late charge collected for that accounting period. PMI, BR, total amount of past maturity interest collected for that day, month, year. Past maturity interest begins to accrue after the maturity date of the loan. The maturity date of the loan is defined as the last contractual installment due date. BR is for borrower renewal and is the amount of PMI collected through the process of renewing a loan. NSF fees, total amount in dollars. NSF, non-sufficient funds, fees posted for that accounting period. Recovery, payments collected on charge-off accounts for that accounting period. Finance charge, finance charges on the loan, difference between the amount financed and gross, interest plus acquisition and other fees associated with making the loan. Refunds, any refund of interest not earned because of early payoff or renewal, refinance, for that accounting period. Miscellaneous income, AF, total extra income added at closeout for that accounting period. This is a lesser used item, but a vital one. If you find your branch with extra money on hand that is not the result of an overage, you would use miscellaneous income. AF number is auto club fee, if applicable. Income, total income calculated for that period, fees collected, late fee, NSF fee, PMI and recovery, plus finance charge minus refund. Expense, total expense, expenses 1 to 60 added together. Profit, income minus expense equals profit. More expenses. More expenses is additional accounting expense categories, 20 up to 60 total, defined for use by your company to track additional business expenses. This concludes the period report training. Please refer to the period report documentation for a detailed written description of all period report fields. Thanks for watching. See you in the next lesson.